Let us start today's analysis. Today is 19th May 2026. So today's CPR was very wide. Wide CPR usually means reversal or sideways take. So let us see what happened. Keeping this bias on the wide CPR day, the first candle opened as a OD pattern, open drive pattern. This candle closed above the PDH and this was a candidate for open drive, like we should go long here, stop loss below the candle, and twice the stop loss is target. But today it is a low probability because there are two reasons for it. Most important reason is today is the white CPR. White CPR means it's not a trending day. Even if it is trending day, it will not go like immediately from the first candle itself. It will take retracement and then it will go. If it has to go as a trending day, at least it will come back to 20 EMA. So this is the low probability on first candle. And second reason is the previous day high was not a supply zone. So whenever previous day high is a supply zone and then this OD pattern happens, that's a high probability setup, even if it is wide CPR. But today it wasn't supply zone and it was a wide CPR. So because of these two things and with other reasons what I explained, this was not the high probability setup. So there is no entry on the first candle. Second candle broke the first candle high, still no entry because it's a wide CPR. So I expect some retracement or the reversal. The reversal came on the fourth candle, this 9:30 candle, but it's a huge candle. There is no point going short here because the first candle low was not broken. So immediately after this candle got reversed. So there is no long entry here also. So if you take a long entry and put your stop loss below this candle low or the day's low, your target 1:2 will go above the day's high, and day's high will be a very strong resistance. So this is also a low probability. And on this candle, there is one more thing you should remember, that this PDH becomes null and void. Because what happened first, it is broken, then it is broken upside down, then it is again broken. So now this PDH is broken 2-3 times. So it is less powerful now. So we cannot consider PDH for rest of the day today. Okay, so with this setup, it goes down, it goes here. Here also there is no 20 EMA retracement or anything because it should be trending day for 20 EMA retracement trade. And 20 EMA retracement trade happens usually when there is no wide CPR. So there is no trade here, no trade here. Okay, here many people will say it's a M pattern because this goes up, this goes down, and this goes. Okay, usually it can be M pattern, but in such cases you have to see two things, that market bounced from the 20 EMA, so this is a strong support area, and as I said, market is above the 20 EMA. So when market can be bearish or little bit weak, only when it breaks this 20 EMA. Because even if you take here, there is a 20 EMA on the side, and it is above the 20 EMA. That is one reason. Second reason is M pattern is high probability when the retracement happens 50 to 60%, not like crossing the first candle low also. So market started from here, this was the low, it went up to this point and it it went below the first candle low. This and then again it went up. So this is not a high probability M pattern. M pattern means it should go up, then come down, but should not cross the first candle or day's low. Here it crossed the day's low, so it's not a M pattern. Like people will still say that this is M pattern, but I usually don't follow this as M pattern because it's a low probability. It may work, but it's not a pattern for me with my back testing and all. So there is no entry here. There is an entry on this candle, kind of like false breakout. First candle high was slightly broken, and then again this candle reversed, but it is very small, like unnoticeable. So it's not a perfect breakout, false breakout. What is the trade for me? The trade is this candle. This is 11:10 candle, and this is exactly same pattern of yesterday's pattern. This was above the 20 EMA, then this candle broke the 20 EMA, you should go short. Your stop loss should be above the day's high or above this pivot, because market has a tendency to go to the cluster of the supports or resistance. So your stop loss should be just above the final resistance, and then twice the stop loss is your target. So in this case, I don't think the target is achieved, but it was very near to the target. So that's it. There was only one trade, and yesterday also similar pattern happened. I think, uh, yes. So it was below the 20 MA. As soon as 20 MA was broken by this candle, as long as it was up, there it was a trade. Like you go long here, your take profit was this 1:2, and then it broke again. Again it happened, like went up. So that is how we have to treat this 20 MA. So 20 MA, once it is broken, and many people will say this this candle has again then reversed from the 20 MA, like it was a false breakout of 20 MA. No. Now when the first trade happens, and until the first trade's target or stop loss is achieved, you should not take another trade. Like, this when you take a short trade here, either target should be achieved or your stop loss should be hit. One of the two things should happen, then only your second trade can uh, be considered. So there is no trade here. So this is the way I think today's result is. If suppose somebody takes a trade here and it stop loss hits, so this will be like one stop loss and one target. But I generally consider the first candle is a low probability trade. But still, we can say result is one stop loss and one one target. So that's it, guys. We will see tomorrow. And before that, let us see the daily time frame also. In daily time frame, uh, actually the market was there was a lot of support downside, so I was not willing to go short unless we get the best entry. Best entry means best entry was on the top of the day, like uh, here when the first candle high gets, then it got reversed here, and then this one. But if you see, this market is like reversed yesterday, and this was a white CPR. uh, it did not reverse properly. So see, you have to consider like this: first candle low was broken, so this was not a proper uh, bullish candle, or there was not lot of we can say support area here. The second candle also, it did not form as if, like, it is it's a big weeks down, and then it's not a proper risk reward. So people, the professional, like most of the professional traders, they will not take the trade here. So what market does most of the time, market gives another chance. It has to go and touch this bottom somehow. So not to take again reverse, but to uh, have this trade work, like, from the top it got reversed and then it worked. So but this all will come with daily practicing and checking the charts and all. You will realize automatically how your instrument is behaving. For that, you should only follow one instrument. Now I just follow Nifty. People follow Nifty and Bank Nifty together, but with my experience, I used to do that. I still like to do it, but for me it is like I want to keep it very simple, and it's lot of confusions are there when you follow two instruments. So better to keep it very simple. And the in trading, the most important thing is risk reward, risk management, and simpler the better. Okay. Thank you. Bye bye. Take care.